just about a week back.
Sure. So, Mr. Jain, if I may just get one or two clarifications from you, sir. Could you tell us what your long-term debt on the books is currently, and also if you can tell us how much debt do you have of a short-term nature, which means 3-month commercial paper, that kind of debt?
If you look at that total debt of the company as of December 2010, which we have just closed recently, the total debt has been outstanding of something around 1,372 crore on a gross basis, which includes 257 crore rupees of short-term debt and 1114 crore rupees of long-term debt. So, and if you look at the net debt position, which is something in the range of around 1100, because the company is having a surplus cash on the balance sheet to the extent of 261 crore. So, the debt position looks to be very, very comfortable, and the net worth, if you compare with the net worth, which is 1770 crore, so the net equity on a gross basis comes to much lower than 1:1, and then on a net debt basis is further down to 0.63%, 4.63 is to 1. So the overall debt position, I think, is very, very comfortable, and then these are easily to be serviced, and if looking at the growth of the company and all that factors, so that has to be there on the balance sheet, but very, very comfortable level.
Right. So, Mr. Jain, now just two related questions, if I may ask you. I was talking to some of the people who use packaged products, not necessarily yours, or they use the packaging. They were saying this was a very unusual 5 to 6 months where packaging cost really did go up very significantly. What I wanted to ask you, sir, is it possible to increase packaging prices again, or basically now they have stabilized? And also, what raw materials are you using, and are those prices rising?
Yeah, let me address this question, differently. Firstly, you said that the prices for the packaging material, which is the finished goods, which are used by most of the large companies or FMCG or multinational companies for packing their product. Obviously, the prices for those have gone up compared to the previous period for the reason because the raw material prices also have gone up in the form of PET film and marginally on the BOPP film. So obviously the cost of the packaging product has gone up. But let me tell you that the cost which has gone up for the packaging material is all within the overall tolerance range. What we say that tolerance range is that if the packaging cost to any manufacturer or the packer of this of their goods is within 5% of their MRP, then it looks to be sustainable and looks to be doable. But if it crosses beyond 5%, then it starts concerning and taking a pinch on that. Then they start looking at what to do and how to do, and then we also help them in offering a solution in terms of increasing their productivity or yield and all that, so that the cost remains within that parameter. But as far as the raw material part is concerned, that there has not been a further rise as of now. Rather, there has been some correction towards downward over the last 1 month and so. So definitely, I think this price has been rationalized and then softened to the level which looks to be sustainable at least for a near term. And in the next year, probably this kind of a scenario may continue what current level it is, and then maybe towards the end of next financial year, there might be further correction towards downside on the overall PET film prices, because we expect that some more supplies will come in into the market, and that might have some impact on the overall, correcting the price of the PET film.
Mr. Jain, so Mr. Jain, just a quick question from my side. So this time profits have grown over 400%, sales have grown 70%. What kind of an average growth rate, both on the top line and the bottom line, should your investors expect for the next couple of quarters? A sustainable growth rate, how much would you expect on a quarter-on-quarter basis? Or if you can't talk quarter, then sort of as a year as a whole, what kind of a revenue ramp-up are you looking at?
In fact, let me tell you very honestly that as I mentioned that we are targeting $1 billion revenue, and this year is going to be something close to 3,500 crore. As against that, we should be somewhere in the range of around 4,500 to 5,000 crore, in the next year, which we talk about around 25 to 30% growth in the top line. And as for the bottom line is concerned, as I mentioned, that I won't be able to comment as of now because we need to really review the whole position by the end of the year, how the overall prices behave, and what kind of condition remain, what kind of other new capacities are going to come in the marketplace. And we will be able to work out, but definitely we expect that the kind of volume growth we are expecting, the profit level which are going to be in the current year, they'll definitely be maintained, whatever the situation arises on the price softening.
So you'll
we expect that there may be an increase of around 20-25% in the profit level, against the current year.
All right, Mr. Jain. Good luck with those plans. So 25% increase at least at the top line level is what they're forecasting in the next 1 year. And they should at least hold their product prices. That's what they can guide for right now. And that should translate into at least a 25% profit increase as well, if not more. That's uflex. Break. Back in a moment.